Why don't you tell us the TPW,
tripolar
world
yes,
thesis?
yes,
What is that?
Well,
it's a phrase that you coined.
Yes, it is a phrase that I coined. I want to make sure I own that as a sell-side strategist, right? You know, you got to own those themes. And the tripolar world theme really comes out of my view that 2008 was not only a financial crisis and crash, but it also meant the crash of all major global growth models at the same time. So you had the U.S. debt finance consumer model destroyed. You had the European vendor financing model where the Western European banks were lending to the southern periphery at very low interest rates. They borrowed way too much. That crashed. And then you had the emerging markets, which was an export to the West model, and that crashed. So really, we in 2008 destroyed all our growth models at the same time. And we've basically been buffering that fallout of that collapse since 2008-9, really using monetary policy, particularly in the developed economies, right? The Fed with QE, Bank of Japan with QE, and of course, most recently, the ECB with QE. The other factor that's really buffered the world economy is, of course, China in its massive stimulus in 2010, which really gave all emerging markets a big leg up, all the people selling into that demand profile, and really led to a situation very unusual where the emerging markets provided the bulk of the global growth since 2010. All right, and so now where we are, in my view, is we're kind of caught in this no man's land where the Fed is done with QE, perhaps, we can get to that.
We shall see.
And China is, in my view, definitely done with massive stimulus. They no longer have the room to do a big deal. And I was in China a year ago, a little bit more than a year ago, and it was clear at that point that the 2010 stimulus was seen internally as a major mistake. And that was one of the things that allowed me to suggest over the course of the last year that there's no way China's going to do a big move. They're doing lots of little moves to try and smooth out their adjustment process, and we can come back to China if you'd like. I've got a lot more thoughts on that, but I want to get to the tripolar worldview. So, as the lead-in, tripolar worldview basically argues that we are in a world of insufficient demand, excess supply, no inflation, and excess debt. And those the combination of those four things is very low growth. The outcome of those four things. In the last two, no inflation and high debt loads is very worrisome. Right? We can go back to the 1930s and understand what happens, because if you can't raise your prices or prices fall and you go into deflation, your debt level stays the same. You've got to work harder and harder to try and pay that off, and ultimately that you collapse. So in that world of insufficient demand and excess supply, we need a new growth model. And what's interesting to me is that over the last couple of years, there's been lots of questions about, how can we do this? How are we going to get out of this problem? Even starting to define the problem as secular stagnation, right? Larry Summers. But very few people have really developed a case or a model to grow. And so tripolar worldview is my attempt to provide that model, okay? So tripolar world 1.0 began back in the 1990s with NAFTA. All right, NAFTA brought together the U.S. as the consumer, Canada as the energy provider, and Mexico as the low-cost manufacturer. That was the model. All right, and I argue that the introduction of the euro in '99 is a competitive response to this. And if you think about Western Europe as the consumer, Russia as the energy provider, and Central and Eastern Europe as a low-cost manufacturer. China and Asia a little bit different. That wasn't quite as well developed, but you could basically argue Northern Asia as the consumer, the Southeast Asian nations as the energy provider, and China obviously as the low-cost producer. Okay, fast forward 20 years to 2014, 2015, and there are three new factors that are driving, I believe, sustainable new factors that are driving what I call tripolar world 2.0. And the tripolar is obviously the three regions, Asia, Europe, and the Americas. And these three new factors are each region's growing ability to self-finance through wealth savings and wealth pools that have developed over the last 20 years. Think of the European corporate bond market. Think of the massive increase in savings in Asia as two examples. And of course, we have our own massive savings pool here in the Americas. So the ability to self-finance. the ability to self-produce through advanced manufacturing, robotics, 3D printing, the focus increasingly on being close to the consumer, right? So the ability to self-produce. And then third, the ability to self-consume, which is driven by the very big factors of urbanization, the growth in the service sector economy, and e-commerce. And so I think, I argue that the next step for globalization is kind of a step back to regionalization and regional integration as the catalyst which can catapult the world economy onto a higher growth path. Now, where are we today in this process? I see the three regions in the following fashion. The first is a proactive region, and that's Asia, led by China. You think about the Asian Infrastructure Investment Bank in China, right? You think about China's Silk Road and Maritime Silk Road initiatives, and that's clearly, they're trying to stitch up their region. I think both for economic reasons as well as for strategic kind of geopolitical power reasons, right? They want to make sure they dominate that part of the world. Now, of course, Asia has a lot of challenges to it too, and I kind of summarize them in what I call the Asian Iron Triangle. And that Iron Triangle is made up of a weak yen, slowing Chinese demand, and a strong dollar. And that helps explain why Asia writ large has been such a challenge, because there are major forces in play there that are completely reordering the whole process. But nonetheless, in this tripolar worldview, Asia is the proactive region, led by China. The second region that we focus on
and I guess just backing up, how does Japan play into the proactive?
Well, Japan.
Or how do you think about Japan in that context?
Well, I think Japan has the ability to be a player, a major player. They have successfully kind of repositioned themselves as a lower cost producer through the devaluation of the yen. And as I mentioned, that's a challenge for the rest of Asia. If you think about it, when we entered the financial crisis, Japan was trading at about 125 to the dollar, the yen. And it went all the way, it strengthened all the way down to 75 yen to the dollar. And they were the first ones to throw up their hands and say, you know, we can't sustain this currency level. And so they devalued back to 125. Now, keep in mind that the important currency relationship in the world, one of the most important, is the dollar renminbi peg, the Chinese currency roughly pegged to the dollar. So Japan's devaluation versus the dollar has also been a devaluation versus China. And that's why, as China slows, Japan arguably has been insulated from that slowdown by the fact that they've already devalued themselves. That doesn't mean they're going to completely escape any of the fallout of a significant China slowdown, but it does mean that unlike South Korea, Indonesia, Thailand, Malaysia, etc., they've already done their devaluing versus the renminbi. So the second region is the reactive region, as I call it. So there's the proactive region, Asia. There's the reactive region, which is Europe, in my view, reacting to the crises, the series of crises that Europe has faced right over the last couple of years, the bank issues that fell out of their broken growth model, the Greece issue, now the migrant issue, and potentially down the road, the Brexit, right, the potential for the UK to leave the euro. I think Europe would love to get a chance to be finished with all these worries and be able to focus on deepening its growth model. And there are three specific areas where I see that as potentially happening. The first is in the capital markets, right? Moving from a capital market union to a banking union. So a fully integrated financial system. Second is in the energy space, where there's a clear strategic desire to kind of rebalance their energy supply and demand away from Russia. And then third is the digital single market, which is a big deal and potentially would be very powerful for the European economy. So that's the second region, the reactive region. And then of course we come to the third region, which is I call the inactive region. And unfortunately for you and I, we sit in the inactive region.
The inactive is basically NAFTA?
Well, yeah, NAFTA plays a part in it, and the view simply stated is that this region, the Americas, so not just the United States, but South and Central America,
Yep.
we really missed and passed on a big opportunity to take advantage of our first mover position with NAFTA
Right.
20 years ago. We really haven't integrated anymore in the last 20 years.
Yep.
So we have gone from being the leader with NAFTA to being the laggard.
Or doing nothing.
Yeah, and therefore by definition becoming the laggard.
Yep.
And so here I think I'm somewhat confident because of the following fact, and that is that South and Central America are desperate for a new growth model. Right? They really benefited from China's demand for raw materials. You think of Chile with copper, you think of Brazil with iron ore,
Right.
Argentina with food, Venezuela with oil. All that stuff is finished. And you can see it just in the fallout when the Brazilian economy, for example, is
Right.
a perfect example. And so I think the opportunity for our region to come together is quite large, and I think the appetite south of our border is unusually so, more desirous of this than we are.
Mm-hmm.
And if you think about it, people don't really appreciate the fact that if you gross up all of South America, you have roughly 500 plus million people. You have a region that over the last 10 years or so has grown at a 4% GDP rate, roughly. Now, of course, some of that's China related, but nonetheless, very strong growth. And that has led to a situation where the per capita GDP is something around $10,000.
Mm-hmm.
And so that is
That's
a big region
Yeah.
that has now reached a maturation level and a wealth level that would suggest an ability to consume
Right.
in a significant way. And so I've been arguing that we should be focusing a lot of our attention southward and look to develop our regional economy. So we already can take energy from Canada and bring it to Mexico, right? That now is actually happening. And so this is an example of the integration in NAFTA. We need to take that further south and bring all those hundreds of
to
millions
this
of
500
people,
million. Yep.
potential consumers who U.S. Could engage with in a way that would be profitable for us, obviously, and profitable for them and beneficial. And there's all sorts of ways of thinking about it. But I'm a big believer that that's the real upside for the U.S. The upside for the U.S. is not, in my view, doing a trade deal with Asia. It's not in doing a trade deal with Europe, right? Europe is, even though I like Europe from an investment perspective, it's not a fast-growing region.
Yep.
And Asia, we already have trade relationships with virtually everyone there.
Yeah.
This is, in my view, kind of more driven by the desire to kind of hedge China a little bit than it is to truly stimulate economic activity. The real opportunity in terms of economic activity, I believe, is U.S. looking southward in developing our region, the one of three in the tripole worldview, developing our region into a much more coherent, cohesive, integrated economic entity. Because I believe the next 10 or 20 years, and we can maybe finish on this and move on to something else, but my final point would be that, there'd be two. First is that if you think about our options, right? Every country for itself is not really an option. That leads to trade wars, currency, all the things we know are bad, okay? Muddle through, as we are doing, risks upheaval both on Wall Street, I would argue, and on Main Street, right? Globalization, as we've known it, I think is over. We're not going forward. Everything, you go look at global trade flows, you look at financial integration, you look at a number of different indicators, they're all going in reverse. So that's not the way forward. And I would argue that the tripolar worldview is one that can be a way forward, and I'm trying to offer it into the space as an example of a growth model. Yep. We need to come up with a way to deal with the insufficient demand, excess supply, lack of inflation, and heavy debt. Yep. And if we don't, then I think we're set up from a financial market. From a financial market perspective, it's going to be very, very challenging.
Yep.